Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
So let us continue looking at the concept of provision for doubtful debts, particularly the accounting entries. At the end of the session, you should be able to demonstrate how to make accounting entries necessary for recording a provision for doubtful debt. But in order for you to know how to record the provision for doubtful debts in your accounting records, you have to know your accounting entries, which account you're going to debit and which account you're going to credit, and what concept you're going to use in arriving at the values that you will be recording in the accounting book. Now we're going to look at three scenarios, three things as it relates to the provision for doubtful debts. The very first year when you decide to make the provision, the business basically will be creating a provision for doubtful debts because that's the first time you're making a record of it in your accounting books. In doing that, this value that you generated will be shown as an expense because when you create a provision for doubtful debts, that is an expense to the business, right? So you would debit your profit and loss account and credit your provision for doubtful debts account. So whatever you have calculated based on the percentage given that the business is using to arrive at the amount of debtors that may not be able to pay their outstanding balance, all of that you have calculated will be recorded in the accounting record. So all of that should be shown in your profit and loss account as an expense for provision for doubtful debts. Now, in the other years, the later years, whether it be the second year, the third, fourth, whatever it is, in those years, only the increase or decrease in the value of provision is shown in the profit and loss account. Only increase or decrease is shown in the profit and loss account. So, for example, last year, based on your calculation, provision for doubtful debts amounted to $500. This year, based on your calculation, it amounts to $700. The difference between what it was last year and this year, you would notice that there's an increase of $200. Only the increased value is recorded in the accounting book, in the profit and loss account for provision for doubtful debt. But I mentioned only increase or decrease. You may be wondering, how do we treat these in the accounting records? Which account we're going to debit, which account we're going to credit. And we're going to focus first on the increase. So to increase the provision, once you're increasing it, it is an expense to the business. So therefore means that your profit and loss account is debited, while your provision for doubtful debts account is credited. Please note that the provision for doubtful debts account carries a credit balance. The provision for doubtful debts account carries a credit balance. So when you're preparing this account, you would notice that the balance brought down is reflected on the credit side. So please bear that in mind that your balance brought down for provision for doubtful debts account should be reflected on the credit side of that account. So we have looked at the increase, and we say that once there's an increase, this is an expense in the business. Likewise, if you're creating it for the first year, that is an expense. For the other years, if it is that, or for whichever year, if it is that there is a reduction, that is a revenue to the business. So to decrease, you debit your provision for doubtful debts account and you credit your profit and loss account. Once you debit your profit and loss account, that is an expense. And once you credit the profit and loss account, that is a revenue. So the first year, and if there's an increase, that's an expense. But if there is a reduction, the provision for doubtful debts is a revenue to the business. Now, we're going to look at an example. How the provision for doubtful debts is recorded in the accounting book. So let's look at a practical example, a question. So here we have a question right here, which reads, the following are the total figures for debtors at the end of each financial year. The provision for doubtful debts is to be maintained at 5% of debtors at the end of the year. So what we're saying is that the provision for doubtful debts must be maintained at 5% of debtors at the end of the year. Now, we're seeing where the first year, which is 2018, debtors value at the end of the period is $10,000. For the second year, which is 2019, debtors value is $15,000. And for 2020, the balance for debtors within the books is $12,000. Assuming no provision had previously existed, which means that there's no balance in the account for provision, and this is the first time that the business is creating a provision, which will be in the year of 2018. You're required to construct the provision for doubtful debts account for the 3 years, show the relevant entries on the profit and loss account for the 3 years as well, and you're to show the debtors on the balance sheet extract as at December 31st for 2018, 2019, and 2020. So this question is similar to a question that may be asked or may be given in your exam. Now, what do you do first? So now that we have read the question and understood what we're required to do, the first thing that you need to do is your workings. So we're going to look at the workings, and we start out with the first year, which is 2018. And in order to do your calculation, it is your debtors value that you're calculating the rate of the provision on. So that's 10,000, which is your debtors value for 2018, times the provision rate of 5% that is given. And that gives us a value of $500. So 10,000 times the rate of 5% given to us in the question give us the value of 500. So that is the balance of the provision for that year. Now, because that's the first year, whatever value that you have calculated, which is the balance of your provision, all of that will be sent to your profit and loss account, and your provisions account will be credited. So we're going to indicate that the provisions account should be credited. You can do that in your workings. In 2019, the debtors value is 15,000, and we're going to multiply this by the rate of 5% that they indicate that the provision must be maintained, and that gives us $750. Now, in comparing last year with this year's value, we notice that for this year, it is greater than the previous year, so there's an increase. To ascertain the value that increases by, because that is what we record in our profit and loss account for the provision, you'll find a difference between the 750 and the 500. And that gives us a value of 250. So we're saying that the provision for the year is 250. That is what you're recording in your profit and loss account for the provision. Now, what are we going to do with this 250 in our provisions account? Our profit and loss is debited because once there's an increase, it is an expense, and our provisions account is credited. So we're just indicating beside that we're going to credit our provisions account. And the amount that we're going to show is the 250. The 500 right here is the balance for the provision for 2018. The 750 is the balance in the provisions account for 2019. And now we're going to look at our calculation for 2020. 2020, our debtors value is $12,000. The rate remains at 5%. So we're multiplying that 12% by 5%, and that gives us a value of $600. Now, last year it was $750. This year it is $600. We're seeing that there is a reduction. To find the value that it decreases by, you find the difference between what it was the year before and what it is this year. And we notice that when we find that difference, it is 150. So we're saying that the provision decreases by 150 for this year. Remember, once it's a reduction, it is a revenue. So therefore, you're going to debit your provisions account. So we're indicating that we're going to debit our provisions account, and our profit and loss account, of course, will be credited because we're showing that as a revenue. So now that we have our calculation, we're going to proceed to do what is required. And the first thing is to prepare the provision for doubtful debts account for the 3 years. So here we are, labeling our account provision for doubtful debts account. And the first year, the first entry that will be recorded in your provisions account is a credit entry. And we're showing that for 2018, at the end of the period, that is when we're recording it, December 31st. And our other item affected is profit and loss. And the amount that we have calculated is 500. So our profit and loss account is credited with $500. Now there's no more entry for 2018. So we're going to proceed to balance off this account. So that is December 31st, details balance carried down. And the amount that we need to balance off the account is $500. So we're going to double underline that. And then we put in our balance brought down. After December 31st, we proceed to 2019, and that is January 1. Our details is balance brought down, and the value is the same thing as your carried down, which is 500. So we're saying that the balance in the provision for doubtful debts account for 2018 is $500. So we begin with 2019 with that. In 2019, we are going back to the workings. We're seeing where the provision that should be recorded in the profit and loss is the increased value of 250. And we're going to credit our profit and our provisions account with that. So the increase is debited to your profit and loss account and credited to your provisions. So in your provisions account, at the end of the accounting period, which is December 31st, our provision being sent to our profit and loss account is 250. That's the amount it increases by. No more entry for 2019, so we're going to proceed to balance off. That's December 31st. Our details, balance carried down, and the amount is $750. That's what we need to make both sides equal. How did we arrive at the $750? Below the double underline, we have 500 and we have 250. You add those two figures together, you get 750. Nothing was on the credit side, on the debit side, sorry. So therefore, what we need to balance off is 750. Next, we're entering our totals. And your totals should have a double line below and single line above. So single line above, double line below. Don't forget that. And definitely we have to enter our brought down coming out of 2019. So that's January 1, details balance brought down and the amount. Same thing as your carry down, which is 750. Now, so notice that the balance brought down coming out of 2018, if you look at your workings, that is 500, and your workings is reflected that based on what you have calculated, your provision balance for 2018 is 500. Or provision balance based on calculation for 2019 is 750. Do we have that in our account? Yes, we do. So whatever your calculation is, your balance brought down should reflect that. That's another way in double checking if your provision account is actually correct. So do remember, whatever you have as your balance brought down is the same thing that you have calculated for your working. So use that to double check if your provisions account is actually correct. Now we're into 2020. Our calculation revealed that there is a reduction of 150. This 150 must be debited to your provisions account because that's a reduction. And once there's a reduction, you debit your provisions and credit your profit and loss because you're showing this amount as a revenue in the accounting records. So that is December 31st. The details is profit and the loss, that's the other item affected. And the amount is 150. Now, on our debit side, we have 150. On our credit, we have 750. So our balance carry down rather to have both sides equal is the difference between the two sides, which is 600. Having entered that balance carry down, we're going to put in our totals, which is 750 there and 750 on the credit. Ensure you put in your single line above and double line below for your totals. And to complete the balancing off process, we're going to reflect the balance coming out of 2020 for the provision. That's January 1st. Our details, balance brought down, and the amount is the same thing as your carry down, which is 600. Is that balance of 600 accurate? You, of course, remember, can double check this by checking your workings. When your workings for 2020, which is a 12,000 times the 5%, reflected that the balance in your provisions account is 600. So yes, we are correct. So we're finished with part A. Part B asks us to prepare the profit and loss extract for the 3 years. So we're going to look at that. Profit and loss extract, and that's for the year ended 31st of December. We're not going to write the date there because we're looking at 3 dates in the extract. All we're showing in the extract is the amount for the provision, how you would treat this in the accounting books, in the profit and loss account. And the first year, our provisions account is credited, so our profit and loss is debited. When you debit your profit and loss account, it means that you are listing the item as an expense. So we're going to write less expenses. Now, the item that we're showing is the provision for provision for doubtful debts. And the amount for the 2018, we're looking at 2018, so let's put 2018 there to show the year that you're working with. 2018, the amount is the same amount that you're seeing beside profit and loss in your provisions account, and that is 500. We're going to do the same for 2019. Look in your provisions account and pick up the value beside your profit and loss. Because 2019 was an increase, it is an expense. So therefore, we're going to show this again under less expenses, provision for doubtful debts, and the value there is 250, the same amount that you have beside profit and loss. Apart from that, if you look in your workings, that's the difference between the previous year and the current year. That's what you're showing. Remember, the concept is that you record only the increase in the provision or the reduction in the provision in your profit and loss account. For 2020, we noticed that there was a reduction. And in that case, our profit and loss account is credited while our provisions account is debited. Remember, when you credit your profit and loss account, you're showing the item as a revenue. So revenue is usually added to your gross profit in the TP&L. So therefore, we're going to just show gross profit. We don't know that figure, right? We're just showing how we treat it. And we're going to add other revenues. In this case, one of the revenue is the provision for doubtful debts. So remember, we're showing 2020, and that is provision for doubtful debts. And the value for provision for doubtful debts for 2020 is 150. Look beside your profit and loss in your provisions account, you're seeing 150. Apart from that, go up to your workings, and it is the value, the difference in value between the previous year and the current year, which is 150. And because it is a reduction, we show that as a revenue. So the value that we're recording is 150. And we have completed the profit and loss extract for the 3 years. So we have completed part B. Part C asks us to show the debtors on balance sheet extract as at December 31st for the 3 years. So our title reads balance sheet extract, and that is as at 31st of December. And we're not going to enter the year because we're looking at 3 different years, so we enter them as we go along. Now, remember, provision for doubtful debt is linked to debtors, which is your trade receivables. Where do you show your trade receivables in your balance sheet? These are listed as current assets. So you need to show the heading under which you're recording that, current assets. And the current asset that we're looking at is debtors, and we're doing for 2018 first. So we're showing that the year 2018, and we're picking up our debtors or debtors value for 2018. Where do you find that? You have to go right back to the question. 2018, your debtors value is $10,000. So you use the first column, show your debtors value of 10,000. The provision will decrease your debtors value. So therefore you write less provision for doubtful debts. Now, the provision for doubtful debts for 2018, what we're looking at is a balance in the account. So the balance brought down coming out of 2018 is 500. That is what you record in your balance sheet. Remember, we're looking at the balances in the accounting books. That's what you put in the balance sheet. In your workings, these figures reflect your balances. So those are your balances. And the balances are what we put in our balance sheet. These figures, if you notice, in your balance sheet, because we're looking at balances. So the value for 2018 is 500. And remember, provision decreases your debtor's value. And 10,000 minus 500 give us a difference of 9,500. And we're going to put a single line below that. Let's look at 2019. And I know that you're able to respond to that. We pick up our debtors figure for 2019, and our debtors figure for 2019 was $15,000. That's a figure coming from the question, 15,000. So we enter that $15,000, and from that we're going to less our provision for doubtful debts, and that is $750. Apart from your workings, you can check the account as well. So coming out of 2019, the balance brought down is $750. So this is a figure that we are recording, the balance brought down of $750. $750 from 15,000 leave us with 14,250. And that is the remaining debtors value in the account, because the business wants to be prudent, showing a true and fair view of your debtors reflected in the books. Now, in 2020, that's where we are. We're almost there. 2020, we are going to pick up our debtors value. Pick up our debtors value, and we're going up to the question. In the question, you're seeing that your debtors value is $12,000 for 2020. We're going to record that 12,000 as our debtors. And from that debtors figure, we're going to less the provision. Remember, what we're doing is just an extract. We're showing how we treat the provision in our balance sheet. Now we're going to pick up the balance coming out of the provisions account for 2020, and that is 600. So what we are subtracting is $600 from the 12,000, and that give us a value of $11,400. That is what is reflected in our balance sheet for our debtors, because we don't want to overstate our debtors value. The business made a provision for the doubtful debts. So here we are. Here we are at the end of working a question, the provision for doubtful debts. In exam, you may be asked to show the provision for doubtful debts account, your profit and loss extract, and your balance sheet extract for all the years that they give you. They may ask you to show just for a specific year. So for example, if they say show the profit and loss extract for year 2, you would show only 2019. If they ask to show the profit and loss extract for the second year, you would show only 2019. What if they'd ask you to show the profit and loss extract for the third year? All you would do is show that relating to 2020, because 2020 is the third year. They can also proceed to ask you to show the balance sheet extract for the third year. All you would do is pick up only for 2020. If that asks you to show the balance sheet extract for the second year, you would pick up only 2019 details. Likewise, they could have asked you just to show for the first year, and you would just show 2018 information. Okay, so that takes us to a typical example of a question that may be asked as it relates to provision for doubtful debts, preparing accounting entries for that. And in your profit and loss account, remember, once there is an increase, that is an expense. If you're just creating like we did for 2018, that is an expense. However, in 2020, where there is a reduction, you show that as a revenue. But we had put the gross profit because usually revenues are added to gross profit. So you want to show the full effect, or you would treat it. So you write gross profit, add other revenues, and you put in the item that you reflected as a revenue, which is a provision for doubtful debts, and that is 150. In your provisions account, notice that these figures, the 500, the 750, and the 600 were the balances that you have calculated in your workings. So remember, you can double check if your provision for doubtful debts account is accurate by looking at your calculation, your workings. So in your workings, you calculated the balance in the account, as well as you have indicated whether there's an increase or decrease in value. If there is an increase, remember you show this as an expense. So therefore your provisions account is credited while your profit and loss account is debited. If there's a reduction, the difference is entered in your provisions account as a debit entry and in your profit and loss account as a credit entry, because you're reflecting this as a revenue. So we have mastered the concept, looking at the accounting entries. Remember, the first year you're creating, you debit the account, profit and loss, and credit your provisions account. In the later years, only the increase or decrease is entered in your profit and loss account. In the later years, the increase, you debit your profit and loss account and credit your provision for doubtful debts account. And if there is a reduction, you would debit your provision for doubtful debts and you credit your profit and loss. Again, to recap, if it is the first year you're creating, the provision is an expense. Likewise, if you're increasing, it is an expense just the same. But if there is a reduction, it is a revenue. Okay, so with that said, we have covered the objective of demonstrating how to make accounting entries necessary for recording a provision for doubtful debt.
Like, share, and don't forget to subscribe.